We are excited to welcome a panel of high-profile women tonight, all of whom have made their mark in the industry, and they will share their individual and collective perspective on what's ahead. Gita Kapadia, who is the Chief Investment Officer of Fordham University, and she manages the endowment of about $1 billion in assets and oversees all aspects of the portfolio management process. Prior to joining Fordham in August 2022, she was the Associate Treasurer of Investments at Yale New Haven Health System, where she led the team responsible for managing about $5 billion in system assets. Next to her is, to her left, is Alexandra Leventhal. She's a senior advisor at Houlihan Lokey's Financial Sponsors Group, where she leads an initiative focusing on female-led companies. Prior to joining Houlihan Lokey, she was the CEO of Leventhal Holdings, a municipal bond firm founded by her grandparents in 1925, which she joined in 1988. Just 7 years later, she was the firm's president and CEO at the age of 31. Sorry.
That was last year. That's okay.
2021. Maria Fiorini Ramirez is the owner and chairperson of MFR Securities Inc., the broker-dealer she founded in 1994. She's also the president and CEO of Maria Fiorini Ramirez Inc., a global independent economic and financial consulting firm. Before starting her own firm, she held positions at CIT, American Express, Laval Bank, AG Becker Paribas, Merrill Lynch, and Drexel Vernon Lambert. At Drexel, she was the first woman managing director and chief money market economist. So without further ado, I will turn things over to Maria to kick off. Thank you for being here.
Thank you, Pinta. First of all, we want to thank very much Grant Thornton for the wonderful venue that they provided us. I was here 3 years and 3 days ago before COVID, so I'm happy to be back in a happy, healthier environment. I see that none of us are wearing masks. I feel very free tonight to be without a mask compared to what we went through 3 years ago. And I'd like to thank a few people that will help us put these great events together. First of all, it started with Stanley Goldstein. 20 years ago, he roped me into this. It was the round table with that many people around the table. And we were getting together at one of the law firms. And from there, we have this wonderful, wonderful group in the alternative investments world. BJ called me back in November thinking about doing this. And when BJ calls, whatever the day is, I say yes. So I'm happy to be here. And I'm happy that we'll be able to casually talk about what's going on in the world of investments, alternative investment, a little bit what's going on in the economy. What do we think about it? I think all of us have been, at this business probably together 100 years or so. So we have a few, I think, pearls of wisdoms to share from our experiences. It may not be a macroeconomic model, but it will be a pragmatic thought process that we've gone through. And I really want to congratulate Dennis for what you've done. I think that, we all have a passion. We all have a passion and we all want to do things, but it takes a lot of guts to start your own business, to bring your passion to fruition, and it takes a lot of people around us. We can't do it by ourselves. So I'm glad that you ladies were here, sharing your story, and more importantly, bringing your grandparents, your parents, your children, because I'm a strong believer that education is the key to all. And I was on the board of PACE. I'm still involved there for many, many years. It's like when I finished PACE, my tuition cost me for the 4 years $6,000. Now I give more than that every year, and it's like never enough. But I'm happy to do it because I can do it. And what I was told a few weeks ago was that the crop of students that they're getting from high school doesn't have the math skills, the English skills, the skills that you need to write a paper. I mean, we used to write a paper in college. Now I don't know what they do. But the bottom line is that without the basic skills, it's no surprise that they're dropping out of the first semester. So I'm glad that you're doing that. I have friends, Nora Cunningham, that has done, Rock the Street, Wall Street, with girls in high school, getting them involved in finance. But we all need partners in whatever it is that we do in life. And I'm glad that Grant Thornton is a partner with the Alternative Investment Roundtable, and that you host us all the time. So with that as an opening, I think what we'd like to talk about is, what has happened in the last few years and how we see things going forward. So since Gita is in the world of figuring out where to put the, little pots of money, $1 billion here, $1 billion there, why don't you share some thoughts with you? Because, with high interest rates and what the performance has been in the stock market, liquidity concerns and, everything that seems to be very confusing these days, it'll be good to get some clarity from you. How you assess these things in order to protect the principal and trying to get a little kick above treasuries in terms of investments.
Yeah, so I'll just start by saying one of the best parts about my job is to not have to react to what's happening in the short term, which is not necessarily everyone's fortune. So no, sorry, I think I did that when I dropped it. There we go. Better? Yeah. Okay. So I'm fortunate in that I came from a long-term investment horizon, and I've joined a firm that has a long-term investment horizon. The best part about being an allocator is that you don't have to react to every little thing that happens in the market. It's still not working. Sorry. Better? No?
Yeah,
Yes,
that's it.
yes,
That's
I
it.
hear
That's
it.
it.
Okay. Don't worry, I didn't say anything important. So I'm very grateful and fortunate to be in my spot because I don't have to, like probably many of you do, have to get calls all the time from investors, your boss, your board, whoever it might be, saying, okay, so the market's down today, what are we going to do about it? That doesn't happen in my world, thank God. I shouldn't say it never happens. I mean, it happens once in a while, but it's unusual that it would happen. So I was very fortunate to take this position late last year in the summer, and as you know, we had gone through a wonderful year of 2021 and then ended up with 2022. But my last job, which I was at for over 13 years, I started in the GFC, so I think this is a good omen. There's nowhere to go but up from last summer. From an allocation perspective, I'll be very brief and very broad to say that we're really not doing anything differently. We are continuing to allocate across the spectrum of institutional assets. So we're putting money to work in venture, we're putting money to work in private equity, we're putting money to work in private debt, we're putting money to work in long-only equities and in hedge funds. From an asset allocation perspective as an organization, we've decided to take a little bit off the table on the long-only side, just because we think there's better opportunities in the private markets. And I've kind of always felt that way, regardless of what's going on in the markets. As long as you find the right partners. So, that part of it is probably more art than science. But I like to think that, as Maria kindly said, after many, many years of doing this, we've at least picked up a little bit about some of the art. So, so I'll stop there because I think Alexander has more interesting things.
No. I'm not quite so sure. I'm not in the investing world per se in terms of markets anymore. It's funny, Maria, the other day, someone from the old meeting world emailed me asking to quote my dad because tax-free rates were 5%, and I had been so out of it that I don't think tax-free bonds have been that great for decades. And my first thought was to quote, think of an old commercial that my dad would have done, which is you would have to get 10% from a bank to equal 5% tax-free in New York City with New York City state and federal taxes. So that was my one moment of thinking about the markets. My life and world right now is very different than it used to be, very different than it used to be as a CEO, which I'm quite grateful for, very different than it used to be in terms of dealing with people and investments and the public markets. But I really have the most fun, cool, amazing job in the world in which I'm actually able to use a lot of that experience in dealing with women-led companies. We will at some point you will allocate a specific sleeve to. That would actually be really awesome. But
Not just a sleeve, just the whole portfolio.
yeah, no, totally. And as you know, there are more and more. And what is also exciting is, there's been a lot of investment on the venture side in women-led companies over the last couple of years. And some of those companies have now, many of them have now matured to the point where private equity is very, very interested in investing in women-led businesses. And those businesses now have scaled to the point where, the rest of the world is sort of taking notice and realizes, you can see a meaningful return in a company multiple companies that are worth well over $1 billion. So again, my life right now is really very, very centered on sort of more on the investment banking side and the private markets, if you will.
Yeah, so I think, this is working or not working?
Yeah.
It's working.
It's working, okay, guys, see the green light. I just didn't hear myself. So I think, following up on that, Alexandra,
You gotta speak directly.
yeah, do you see any particular sectors where women are excelling in that could be potentially public companies in the future?
So two things. One is, that is a great overall question because I think that there's a general impression that women, for the most part, are in consumer products. Some great consumer products companies, but consumer products, and that's sort of their limitation. Not the case at all. I would say the sectors where I see the most are healthcare, particularly in telehealth, mental health, digital health, the complete disruption of the weight loss market, and then a number of business services. So some of the more traditional, like staffing, but also talent management. I'll just mention one business I am blown away by because it's a woman in her 30s. It's called the Mom Project, which is a platform that matches up women who want to return to work post babies with companies looking to fill positions. And this is not just, hey, let's fill one spot here or there. These are major contracts with Google, with Apple, and she's filling meaningful jobs. She's got 1 million moms on the platform. The business is growing and scaling. She raised, $150 million. So, but that is very indicative of what I see, which is women solving their own problems. Seeing, wait, this is messed up. You mean it doesn't exist? I'm going to go create it, and then they have a multi-$100 million business. A lot of women in tech, which is really cool. And in fact, one of the things that we started doing at Houlihan is we measure every quarter and every year the number of transactions that we've done with women-led companies. And when we first measured it at the end of last year, it turned out we did more deals with women-led tech companies than any other sector. The tech guys were just so super excited by it. So that's great to see. In terms of public companies, the reason why I'm glad you raised that is because obviously, we know there are not a huge number of women-led companies that go public. And I note that there's sort of, a lot of hype and a lot of PR around when those companies go public, and then sort of the immediate thereafter of, look at their earnings, look at their stock, their business model screwed up, and sort of tearing down of those women and those companies, which, sort of you can say happens in general. One of the things, though, that I do see, which causes me some pause, maybe not concern is too strong a word, but women who decide that an IPO is what they're going to do. That's their path, that's the only thing they want to consider. And I'm not quite sure if it's because they do see this moment of standing up there ringing the bell as sort of an achievement of everything that they worked for, but I think really taking the time to consider what all the options are. It may be a strategic buyer. It may be private equity, and if you're selling private equity, it doesn't mean that's it, you're over and done with. It may be that then that private equity fund helps you grow and scale to the point where an IPO does make more sense. But I will say that there are probably 5 or 6 companies right now that are on our horizon in terms of IPOs. Obviously, that's not going to happen tomorrow. At Houlihan, we do a great deal of work on IPO readiness and advisory, and I'm committed to making sure that when we do work with those women, that we've done everything we possibly can so that after they ring the bell, the big pink banner comes down from the exchange, that then they really are set up to run a very successful public company, regardless of who they are.
Yeah. Well, that's great to hear, because the IPO market has been, relatively quiet for several months, and I don't really think it's going to pick up anytime soon. But I do think that, in order to get to that point of the IPO, sometimes it's a little sooner than what it should be. And I've always been a strong advocate. Stay private. There's nothing wrong with staying private. You don't have the issues to deal with in making decisions for investments. I always remember being on the advisory board of Edward Jones. It's still a private company. And what they always told me is we like being private, because if we have to spend $200 million a year in technology, we could do that. It's our own decision. We don't have to look at the returns and P ratios. It's a partners owned firm. So there are always the pluses and the minuses. But I'm glad that you addressed a little bit the fact that it's a broad set in terms of there's been a lot in the last 10 years, I would say, to get STEM programs, kids more involved in science, technology, and math. And before 10 years later, we start producing results, right?
Mm-hmm.
But if there wasn't that effort, that started years ago, with many organizations really endeavoring to get that result, it wouldn't have happened. Because it's funny, my sister-in-law last night was telling me that, they were talking about, I don't know exactly how we started the conversation, recommending a book for young kids, and what they recommended the boy and what they recommended to the girl. And they recommended to the girl, cookbooks and, how to do things around the house, and what they recommended the boy was, science and, rockets and stuff like that. And my sister-in-law is very advanced in her attitude. She goes, that is not correct. So that's the way it's been. So it's up to the parents to steer, the talent where it should be. So being on the board of a school with Joe Morandi at the Italian school, it's always enlightening to see that they kind of encourage the kids to do whatever they want to be, to do whatever their passion is. And I think that's how, people really excel. So Gita, can you talk a little bit about the things that you favor for the long term? Because you are in the long-term business, and what kind of businesses, sectors, you're paying more attention to for the long term?
Yeah, I mean, I think to Alexander's point, I'm very excited about women-owned and women-led organizations, and organizations led by people of color and underrepresented minorities. When I talk to some of the venture managers in the space, who just really, it's so shocking how unloved these sectors are. So, for example, Black hair care, Black makeup, Black personal grooming products, that sector, that subsector is so underinvested in, and yet there's a huge market of people who are interested in those products. And so when I think about, how many more, Google companies can we have in the world versus this area of the market that is, has a growing consumer base, and yet no one is putting money into it. And that's just one tiny example. There's hundreds of companies like that. So the founders that I talk to, the private equity and venture managers that I talk to, who will focus on those sort of underrepresented sectors, underrepresented companies, they want to support those companies. They want to give them the tools to succeed. That really excites me, because I think there's a huge growth opportunity there that has been just completely undiscovered and unloved. And I mean, that's just because of the way decision making has been done for so many years. And so hopefully that will change, and those kinds of companies will start getting the recognition that they want. I mean, I think to Alexander's point, there are many women-led venture funds that have not had that support, and it's a chicken and an egg problem, right? If they don't get the funds to launch, they can't invest in businesses, those businesses can't succeed, and then allocators like us don't look at them because they don't have a track record and they don't have enough money under management, and we don't want to be the largest investor. So it's never going to happen unless allocators like the NYU's, the Fordhams, the Harvards, the Yales of the world start to actually say we're going to actively put money towards these types of managers. So that's an area at Fordham that, as an organization, we are extremely focused on supporting students. Half of our students are students of color, almost half are first generation college students. So as a living, breathing organization, that's the type of thing that we want to invest in. So that mission needs to be demonstrated across all parts of the business, including the investments. So that's what I'm really excited about, and I'm hopeful that this year we'll be able to make some good investments in that space.
Yeah, having been on that side of the business back in the 90s, I thought I could do it all, so I started a money management business. And after 10 years of doing that and losing a lot of money at it, I realized that in order to manage money, you need a lot of money to start with. And I think that, in order for a business to really get capital, I remember going to Chase for a loan, not that I needed it at that time, but they wanted fully securitized by cash and charging me 3% more than what I was getting on my deposit. And I said, listen, I may have been born a night, but not last night. This is stupid. So of course that I didn't borrow the money. But I think that there's got to be some kind of reckoning that small businesses start with small needs. We don't start with needs of like 100 million. We start needs of a couple of million. So there have been a lot of venture capital woman oriented. But the problem has been that when you go to like an institution to get money from, well, the minimum they give out is 25 million, so forget it. You don't get it in the door because you're too small for that institution to pay attention to you. So it'll be interesting to see as things progress, whether there is a special little carve out for like smaller loans, because I think that most of the business started last year by far was started by women. I talked to someone yesterday, we were talking about the statistics about how much new entrepreneurs have entered the economy in the last 3 years. I mean, the world changed after, we were together 3 years ago, and people that got displaced or, decided to move out and do other things. I always think that crises create opportunities. People survive, they find a way to start a business, go do something else, or go back to school or whatever. So I think that this bad stuff of the last 3 years is going to result in great things 3 years from now, because entrepreneurship is really the basis of our economy. And I think the reason why the economy is not doing as bad as people were thinking it would do is because they don't know how much cash there is in the underground economy. I was talking to someone the other day, and he was telling me that his sister does tutoring for math for $80 an hour. The 26-year-old does tutoring, $80 an hour, and doesn't have room for more students. This is like a story that you can multiply all over, because math is a subject that it's not dear to the heart of being taught these days in many schools. So there are entrepreneurs that make money and they spend it. And I always think of, you have to capture the money where the taxes are collected. And tax revenues, whether it's New York State or other states, are better than expected. Well, somebody must be paying taxes. So the money is being spent. So that's why, the economy is still doing okay with interest rates where they are. So I think that from all the negative stuff of the last few years, you have to kind of look, well, what has changed? Well, yes, there are less people in the offices in New York. I hear it's only like 40%, but I think it's even less than that, because there's a lot of empty real estate. So what's going to happen to the real estate? How a building's going to be retrofitted? What are the ripple effect of that? So I think that, look at what we got. We got Hudson Yards. 30 years ago it was like a nightmare. It's never going to happen. I remember being on the board of Brooklyn Bank Independence 20-something years ago, 22, and they were talking about cleaning up Atlantic Yards, and there was a lot of opposition to it. Well, here we are 20 years later with Barclays Center, and there were 15 skyscrapers going up in Brooklyn. in the next 5 years. I said, where are they gonna be? Along the water. I said, well, I'm gonna have to figure out what the train stops are gonna be because I have no clue when I go to Brooklyn where things are. But, you know, it always seems like things are always working out better. So yesterday, because we're thinking of putting a new kind of healthcare center in a new building, and there was a lot of concern about why it's gonna cost. And I said, one question, how much are people, you know, renting for a one-bedroom apartment in that building? Just give me that number and I'll tell you what percentage is gonna be commercial insurance and what percentage is gonna be Medicaid. Well, $3,500 a month means that a big percentage is gonna be working people that have insurance. So you have a whole fabric of movement of people that are displacing, you know, old stuff and replacing it with younger business entrepreneurs, what have you. You know, Brooklyn didn't have any businesses like 10 years ago, but a lot of people, you know, moved there, whether it's, you know, Bronx, Queens, next, what have you. But the country is like that. And I think the whole fabric of the country, because it's like that, it's more resilient, regardless of what we have coming at us. So I'm optimistic that entrepreneurship is going to be a way to go. And as an investor, finding ways to provide that funnel of initial capital is going to be very crucial so that it's good for the institutions to put their money where their mouth is in terms of helping women, the economy, women, men, everyone to be successful at whatever they want to be. And with, you know, stronger education, then it could all work out.
Well, the ability to start a business changed dramatically, you know, even going back to when the internet was created, which was a new thing for some of us 20 years ago. There are less barriers to entry in terms of creating the business. There still certainly are barriers to entry in terms of getting the capital. And look, it is a catch-22. There are banks that will loan $1, $2, or $3 million, but they're still going to ask for the same collateral. So, you know, sort of that running joke that if I need the money, I wouldn't come. If I had the money, I wouldn't come ask you for it. So, you know, that's definitely still a challenge. And then also even to go to allocating to diverse managers. You know, you're in a position where you can't all of a sudden see every single small manager, and so you use a consultant and, you know, allocate a certain amount based on the size of their fund. And so it's like, how do you get in the door there? So there's still a lot of challenges to overcome. I will say, you know, when I see women who have women and anyone who's bootstrapped their business and done whatever they needed to do to get it to a point where then it was profitable and they could get a bank loan. I mean, there's one woman I met recently, she bootstrapped it for 10 years. It actually created a whole payments business in the wedding and venue space, totally disrupted that business. But it took her 10 years to get to the point where she could then raise a Series A, which was fascinating. But, you know, then just to go to your comments, Maria, on like the opportunity, it's funny, both of my adult kids live in Brooklyn. And, you know, having grown up in New York City in the 70s and in the 80s, and sold New York City bonds when, you know, people were concerned about the ability of New York City to pay, you know, it's remarkable to see how Brooklyn and Queens and the Bronx have completely changed. I always said the most fun job to have, I think, would have been deputy mayor for economic development in New York City. Like, just, you have this, you know, it's not blank canvas, but a canvas that you can sort of reimagine and move things around. And, you know, so look at not just Brooklyn and different neighborhoods where people now live that they wouldn't have lived 10 or 15 or 20 years ago, but even like the Navy Yard. And it's just fascinating to see that somebody with the foresight, you know, some capital, and certainly New York City's debt issuing power behind it, what's been created. And there's still opportunities there. And then every single one of those areas isn't going to survive just because Bank of America has a branch or CityMD has a branch. They're going to survive and they're going to grow because, as you said, of the entrepreneurs that are there who are building businesses and spending money in the local restaurants and, you know, really raising their kids there. And that's what's really exciting to see. I mean, there's still this sort of this American dream, a lot of hard work, but it's still there.
I think it's a matter of looking always at the glass half full. If you see something that looks dilapidated, you can just imagine the jobs it could create by being redone, and by having people around you, you know, at the state level, at the local level, that think the same way. Like a can-do attitude, and, you know, the regulatory, the paperwork and the process, you know, narrowing that to make it happen. So maybe instead of, you know, 5-10 years, you could do it like in 3 years. And I think, you know, with interest rates going up now, that whole, you know, leverage equation diminishes somewhat because we don't have the cheap money to do it. But people that are creators, that's just a tiny little portion of what they see as, you know, the overall benefit in the long run.
I think Maria, to your point, it ties in very well with the presentation you heard, because it's reimagining what that experience is. For many of us probably sitting in this room, college is a 4-year build a campus with buildings and teachers sitting in front of you, professor, my husband's a professor. So college professors and papers and computers, but that's not necessarily what college is for everybody. And maybe we need to think about how college can be accessible to people who don't want to sit in front of a computer and listen to a person standing, usually a guy standing in front of you lecturing. And sorry, my husband, trust me, no one sit there listening to a lecture. It's not a good thing. But you know, you have to. I think, and that goes to what I think what you were saying is this idea that, you know, so for example, at Fordham, the prevailing thought is anytime there's a building on Fordham Road, we buy it. Why? Because it's the Bronx and real estate's worth a lot of money, and so we wanted to have this footprint. And slowly, people in my department are saying, how are we doing that? We need another building. We need to think about how to get the education to the students in a way that's not necessarily sitting in a building full of other teachers and professors and students and all that stuff. So I think, to your point, that entrepreneurship and that sort of creativity around getting to the same place, but through a different way. And I think, to me, that's what mostly the diversity part of it comes in, because these are people who are not necessarily Ivy League educated, went to law school, did the thing, know the people, have the same network as you do. You know, like, they come from a different place and they have a different experience, and that's what makes that decision-making process better and stronger.
That's great. Well, I'm glad that we bring it to, I think, Jay, are we supposed to like finish up soon?
Well, you can take an extra 10 minutes and then go to Q&A, or you can go to Q&A right now.
Alex has a time limit.
Yeah.
So do I, actually.
Let's do Q&A. Yeah, let's open it up. Whatever you want us to address. Not that we have the answer, but we'll make up a good one.
We'll make something up.
Yes.
I have a question for you. So basically,
Is a mic coming for you?
okay. Okay, so
Okay, I really enjoy the conversation, extremely. You mentioned everybody can, or at least I think everybody can identify the way or the thing of investment. For example, your like the black products for hair and this and that. But then you need the people who run this company. So you go back to education. The first question is, are you investing in funds or entrepreneurs or solopreneurs that have a background? How do you identify and select those first? And the second is, if we are here to think about women and support women, right? How do you sector select? Meaning, like, for example, health women health. So I'm talking about biotech companies that go and pursue things that benefit women health, for example, and geographically. So it's the question.
So, I mean, let me try and think back. So, I mean, one of the great things about working at university is all of the entrepreneurship that gets sponsored through a lot of different ways. So, for example, we have a student investment fund. We have an angel fund that identifies entrepreneurs and puts money towards it. That's run by primarily graduate students, sponsored by a professor. Actually, this week, they had a pop-up, I think it's a student, small business, woman-led small business selling jewelry in the main business school building. So, you know, I think there's like micro things like that, which are awesome and wonderful and one of the best parts about working at university. And then there are macro things like the endowment. You know, how can we move the needle? How can we take our $1 billion and put it towards product? And I think part of it is not just like, obviously for me, like it's gonna be somewhat personal, but when we think about truly identifying a good investment idea, how do we make money? These are places that have a huge multiple waiting them. They're just waiting for that money, right? And so to the extent that we're looking for the best investment idea, I mean, a company like a Google has been covered by how many analysts, so there's not as much to discover there as there will be with some of these smaller organizations that I think Alexander's talked about too. The problem obviously is that we're not a million people, right? We can't research every single idea out there. So, and to Alex's point, we do talk to consultants, we talk to other allocators, just to try and find investment managers who are focused on these very niche sectors and subsectors. I don't think I answered your question completely. I'm sort of talking around it, but.
The background is that how do you select, because you recognize
The investment,
Yeah.
More in theory, fundamental, but how do you recognize or select the manager?
Yeah, so I mean, it's a lot of just due diligence, like just fundamental due diligence, talking to them. So we'll, you know, from my perspective, you know, it's many touch points, talking through the way they identify the entrepreneurs, the way that they work with them, the support that they give those company founders, how they exit, you know, learning how they're going to exit them, how long are they going to be in that relationship with them, what is it that makes these founders specifically of interest to them, why do they think they have a competitive edge, all of that. You know, we're kind of putting our trust in those those founders, and not in, like, I'm not selecting individual companies, right? I'm not picking underlying companies.
And then the sectors that you invest in the geography.
So, I mean, geographically, we're pretty diverse. We're trying to invest across the globe. As like many allocators, we have a slight U.S. bias, so that's not a big surprise. But I mean, personally, as an investor, I think there's a lot of opportunity in the emerging markets. So Latin America, Brazil, India, of course. Southeast Asia, actually, particularly, has been very interesting. But it's been a hard place to be. I mean, my committee and my former job was like, you've invested overweight to the emerging markets, and it's gotten us nowhere. I'm like, yeah, it's a hard place to be, but over the long term, I still think that there's opportunity there, more than in the U.S. Obviously, you cannot be in the U.S. Sorry.
But I think it goes along with what you said. You're a long-term investor. So it's not the next 2 years or 5 years. It's more of a generational investment. And I think you have to kind of sit through it.
There's a question in the back, Maria.
Still have a question.
There's one way back there.
Hi, first of all, I just want to thank everyone for having this conversation and for Gabrielle for inviting me into this space. This is just amazing, just to hear this conversation in a so authentic way that we didn't think we would be having, let's say 5 years ago, 10 years ago, and just thinking of how can we reimagine being entrepreneurs and achieving our dreams and being creative in how we get there in just non-traditional ways or not in ways that nobody thought of before. So, and Alexandra, this is a great point that you brought up, is women having a goal of that IPO, ringing the bell. Is it the true goal, or is it just to prove that they accomplished something? Is it really what they want to achieve, or is just to prove, to have this masculine acceptance and acknowledgement. And I think there's just all of these past experience have created an amazing opportunity for women to really step into, are we really going after that IPO experience, or are we going after making the difference and serving more people? What is this IPO about? Is it enabling us to serve more people and deliver the value and create the value? So great, they come from a place. Are we coming from a place of value, or just proving that we are worth something?
I mean, I don't know that it's that really, because at the end of the day, you're not going to get to any exchange or to a sale if you don't have a business that has substance, profit, scalability, growth, etc. So it's not just, this ends to means to an end. But what I do really have been wondering is, why that is the decision that certain women have, when you may realize the same proceeds, actually maybe even more, because then you're not dependent on a public stock if you sell to a strategic buyer or if you sell to a private equity fund. What I do think, and I'll do a little bit of patting our own backs at Houlihan, one of the things that we do is IPO readiness and advisory. So, and it's complementary to some of the work that Grant Thornton might do. So it's looking, well before even the decision to IPO. Like, what does your company look like right now? What are you going to need to have once you're a public company? That's a short-term process. Then there is, once you've made that decision, really work with that company to say, okay, we need to think about governance. We need to think about, reporting. I mean, a bunch of different things that are going to need to be entirely different when you are a public company because of the way you're going to have to report and run the business and have outside investors. And then lastly, there is the component of, okay, you are going to go public. What's the best way to do that? Is it the New York Stock Exchange? Is it the NASDAQ? Is it actually a foreign exchange? Who are the best underwriters? Not because you went to JP Morgan's healthcare conference and they were nice to you, but do they have the right institutional buyers? Do they have the right distribution? What's the fee structure going to be? All this type of stuff that you wouldn't necessarily be able to think about on your own, or if you just chose one bank to be your underwriter. So that's where I was going before to saying, what I want to make sure that we can do if we work with women-led companies going through the IPO process is that we can be that behind-the-scenes work. So that when they do get there, regardless of whether it was, hey, this is what I always envisioned as the ultimate moment of my success or not, that we can make sure that we've done as much to help them actually be successful.
Yeah, I think that there are two parts to it. Going public is like a day in time, but the work really comes after.
Yeah.
Because the regulatory process, and so many public companies, people that started public companies, the CEOs get fired. So if you are the founder, it doesn't necessarily mean that you can lead that company the way you want, because you have shareholders, you have regulators, you have a lot of compliance. That the last thing you're going to do is the things that you were doing before when you were a startup company and you really had a passion in what you were doing, because life gets very complicated being a public company, and that's why most companies, I would think, are still private. There are different decisions. When you're public, you have a board that you report to, so you don't have people that report to you the same way. You report to others, and those are your shareholders. So it's very different. So I think that, if you could accomplish it all by being public or private, you just have to know the differences. And I think working with your lawyers, with your accountant, with your advisors, it provides you, I think, the strength that you need to be the proper company if you're going to be public.
Thank you.
Instead of a question, I have a chance to compliment the panel because you brought up two very important things. One is the importance of small business. And the second is the optimism I keep hearing from all three of you that America is a startup nation. We start companies, we know how to produce entrepreneurs, and we're going to solve problems, and whatever the problems of today are, we will solve them one by one. There'll be fewer tomorrow. So it was well done. Thank you all.
Thank you, Stanley.
Thank you.